Hi traders, welcome to this video. Today I want to talk about two trades I took recently, and both are already finished and I sold out. And both are momentum plays or very strong names which had a strong rally in just a couple of days or a couple of weeks. And I want to show you why I took the trade and how I exit the trade. The both trades I want to talk about are Fulgent Genetics and Aphria. And let's start with Fulgent Genetics. Fulgent Genetics was or is a genetic testing company, and the stock is also related to the COVID-19 theme, so they provide testing devices or tests for COVID-19, and the stock is belongs to that theme, and that means the story from the stock and also the attention on the stock is already there. And I highlighted the stock in my free newsletter before it broke out, and I was or what caught my attention was first of all this chart pattern here. So it was a volatility contraction pattern, a VCP. I made a video about this chart pattern. You find it in my YouTube channel here, and you can see that all the corrections here happen on smaller and smaller distance from the highs to the lows. This is very typical for a volatility contraction pattern. And of course, what also caught my attention was this huge run up here. The stock, you see, the stock rallied from 17.5 US dollar to almost $50 US in just a couple of weeks here. So there is a high demand for the stock, and you can see this very nice volume dry up here in the stock. So on the left side is always the weekly chart, on the right side the daily chart, and then you can see this monster volume here coming into the stock, and that's on the right side of the base. So that's always a sign that a lot of accumulation is going on. And when we look at the fundamentals of Fulgent Genetics, I switch to MarketSmith here. You can see that Fulgent has a very strong fundamentals here. So in the last quarters, the sales growth here from 48, 44, 105, and then almost 900% of sales growth. So there is a high demand for the products. That's normal because they're providing COVID-19 tests. And also you can see that the EPS, so the earnings per share, also increased here over the last quarters from 300, then no or negative EPS, then again 180, and then over 1000%. And also the estimates for next year, so for 2020 1000%, and also for 2021 with almost 70% are real outstanding numbers, so great numbers. So the company or the business of the company is working. And when I switch here in MarketSmith to the weekly chart, you can see also that the company has a very little float. That means there are only very little shares or only a few shares available in the market. So 13 million. This is a very small float, and stocks with a small float can have very strong rallies. And also, if you look, number of funds are increasing. Management is holding a very big stake in the company. So all the signs that there is a high demand for the stock, and also the management is still believing in the company and still owning a big share here. And it's a small company, so today it has 4 billion market cap, so it's rather a small cap stock. And where did I enter the stock? Well, when we switch back to trading view, because I like the charts much more, I entered the stock here on the breakout out of this VCP, and you can see we have a small tight consolidation here before the breakout, and then on the breakout day itself there was a reversal bar. So, and I decided to hold the stock one day later, because this volume here, you can see that the volume here on the breakout day was very, very high, so strong demand for the stock. And then the next day it continues to go higher, and then you can see that the stock had a pullback here, and that pullback happened on high volume. So you can see the big volume bar. Let's remove the drawings here. You can see the big volume bar here, this big red volume bar, and that happened here, and that was a shakeout. And a lot of traders don't like that, so because they are afraid to hold the stock through the first shakeout. But you must always have in mind that this is a stock which is heavily traded, so a lot of traders are trading in and out of the stock, and it's a small cap. And yes, we have a average volume of 2 million at the moment, but if we would not have the COVID-19 theme, this would be still a small cap company. And small cap companies are often more volatile, and especially if you have such a big run up here from the base, so a very, very successful breakout, and then the first pullback or the first shakeout, I am willing to hold it, because in that situation I want to see if the stock is able to recover and continue the uptrend. This is just one day, one reversal day with 10%, and yes, that hurts because you gave back a lot of profits. But in that situation, I'm willing to hold the stock, and I monitor it very closely. So in that situation, my stop loss is very close to the low of the candle, because if now the pullback is deeper, I'm not willing to hold that. Then I'm looking for a new entry in the stock. But if it's just a one-day reversal or one-day pullback, that would show me that the stock is very strong if it can recover after one day. And we saw that exactly. You can see that here. After one day, you saw a very small candle with a very low volume, so the selling is decreasing. And then the stock is going higher, and then we see the second shakeout here. But in that situation, the stock already made a new high. You can see that here, and it was also on higher volume. And in that situation, I personally always start to observe the stock more closer, because that is distribution. So people are selling the stock aggressively into this trend. But again, I have now a profit cushion in the stock. I'm monitoring the stock more, and and already the EMA 21 here was up, and so there was no reason to be aggressive with selling. And then you can see that the stock also built or created two very small candles here, or bars, with low volume. And that was a situation when I decided to add to my position on a pullback, because I see that the pullback to the EMA 21, or very close to the EMA 21, and then this volatility contraction and the smaller or the below average volume here, that shows me that selling is decreasing, and maybe this is the last shakeout before the stock is really ready to run. And yeah, that's why I added a little bit to my position. And a little bit means I add another 5% of my total trading capital to Fulgent here. I started, that's maybe one additional thing here. I started with a 7.5% position. Then I added aggressively on the same day here on the entry to a 15% position. I added another 5% here on the breakout so that I have a 20% position. And then I added another 5%. So I had a 25% position in that case. And this is always my goal, you know, when I trade in a stock very aggressively, because I have higher expectations on the stock. And I try to make sure to have a 20 to 30% position at the start of the rally. So very, in the first weeks here. And then you can see that, Fulgent followed through here very nicely. And let's zoom into that. You can see that Fulgent broke out here above this 80 level. So let's remove the drawings again and draw in this consolidation. So you can see in hindsight it looks like a sideways consolidation, and then here very nice Fulgent broke out and moved higher. But the volume itself, you know, you can see here this big the big selling volume here in the stock. And then you can see on the breakout, the volume was decreasing, and that's not a great sign here. And then you can see that Fulgent broke out above the 100 level, and then you can see another thing. And you can see that there was a day here on the 1st February when Fulgent had a very, very big expansion here. So it went from $113 to $160. So a very, very big range. So let's see what is it? 40%, so 44%. And in just one day. So a very big expansion. And it happened on the highest volume here, since the beginning of the rally. So a very clear sign for me that the stock is exhausted. And when I see something like that, you know, a stock is breaking out of a sound base, then consolidating, and then really going vertical, so exploding to the upside with a lot of volume and a lot of price power, that's a sign for me to sell. And this is selling into the strength or selling into exhaustion. And so I started to sell Fulgent here on that day, and I unloaded my complete position on that day here. And now you may ask, what would happen if the stock is going higher or not? And this is a question you should not ask yourself in that situation. Because the thing is, when I'm selling into the strength, I want to make sure that first I exit the position with a decent profit. So this is more important for me. I don't want to press every cent out of a trade. I want to make a decent profit. And in that situation, you must see, you know, I started to buy here. And in that situation, the stock was up almost 200% from the buy point. So I sold a little bit earlier here. I think the most I sold around between 120 and 150 here. But the thing is, in that situation, I'm sitting on a more than 20 R profit, so 20 times my initial risk. And that's a very big profit in my trading journal. And this is a profit I want to protect. So, and that's why I personally exit or sell all the shares into the strength. And you can see, in that situation, my stop loss, although my stop loss would be below this bar here, I have a risk of around 30% from the high to the stop loss. And now you must ask yourself, 30% risk, what is the opportunity? The opportunity on that day is not that we will see another 30% move or something to the upside. So that would be, let's go to 200. So in that situation, I'm just more thinking about risk management, and I want to make a decent profit, and I don't want to press every cent out of the trade. So that's the first thing here I'm thinking about. And the second thing is I want to keep my equity curve, so my account balance, on a new high or close to the all-time high. Because in that situation, when I sell into the strength, my equity curve is on a new high and is very steep up. So, and when now the stock reversed on the next day and I sold into the weakness, so when I sell into, when the stock is down 10% or 12% or something, I'm automatically in a drawdown. And that's something I want to avoid. And this is another thing why I sell into the strength. And you should also not forget the opportunity cost. But we will come to this when I talk about the Aphria trade here. So, and then you can see when I was out on that day, and the next day the stock reversed almost 20%. So, So, of course, this is nothing I know, or this is nothing I expect automatically, but it reversed. Then you can see it go sideways, and then it exploded again to the upside, another 50% here. And this is a situation when I'm out. So I'm just observing the trade. I made my money with the trade. I can observe it. I can look at it. I have no regrets because I made a big profit. And I have no regrets, and this is important because I can use the money and the profits from the Fulgent trade for the next big trade. And the next big trade in that case was Aphria. And this is something you must have in mind. When you sell into the strength, and you can move your capital very quickly to the next trade, to the next big winner. And you can do that in a very, very short time. So that means you're rotating your capital between the trades very fast. And especially in this market situation, what we are currently in, so in a very strong market, and then you can compound a lot of money in a very short time when you are able really to let your capital rotate. And this is something you must have always in mind. So when you sell into the strength, you can take the capital and put it into the next opportunity. And that was Aphria. And Aphria was a trade I also highlighted in my free newsletter. And let's look at the weekly chart here on the left side. You can see a very strong rally here just in 2 weeks. So here 2 weeks, the stock rallied here from 7 to $14, so doubled in just 2 weeks. And you can see that happens on huge volume. And also the whole industry, cannabis and marijuana industry, was in a very, very strong uptrend. So money was flowing into the market, and a lot of cannabis stocks popped up in my screeners. And this is why I had a look on Aphria. I personally did not so much research on the company. I did not know that Aphria is in a merger and acquisition process with Tilray. So, but I only looked at the price action here. And then you can see this very nice flag here. So over 1-2 weeks, the stock was going sideways in a very, very tight, in a very tight manner here. And in that situation, you can see also the S&P 500 was here in a correction and Aphria was going sideways. And that was the situation when I looked the first time here at the Aphria chart. But there was also, I selected Aphria out of multiple cannabis stocks, and I selected Aphria because Aphria had very good fundamentals. So you can see, Aphria will turn profitable in 2022. So there is a good estimation, EPS estimation. You see rising number of funds here. You can see a positive sales growth over the last quarters here, although it is a little bit decreasing. But that was still a sales growth and a strong sales growth if you compare it to other cannabis stocks. The most of them do not have good fundamentals right now. And that was also a stock which were very close to an all-time high here. And that was also a situation what caught my attention. The thing is, here in MarketSmith, the previous trading history here in the last years is missing. So the stock traded in the last years at the on the OTC market because it's a cannabis stock from Canada. So, but here in TradingView, I also have the trading history from the OTC market. You can see that here in 2016. But you can see that it was very close here to the all-time highs. And that was also a reason to select Aphria, because there are not so many cannabis stocks right now which are close to an all-time high. So, how did I enter Aphria? You can see that here, you can see this 2-week explosion to the upside, then this very nice flag pattern. That was also, there was also a dry up here in volume, which gave me conviction. So the selling was going down to the consolidation here. And then on the day, on the breakout, the volume was 100% above the 50-day volume average here. So the black line. And that was a day when I bought into Aphria, and I started as usual with a 7.5% position, so a half position. Then I doubled it to a 15% position, and then because the trade closed so good, and I was sitting on a good profit at the day, I decided to add another 5% so that I have a 20% position here in Aphria. And then you can see on the next day, after the breakout, that was here on the 3rd February, you can see that it followed through to the upside with 12% gain and also 200% above average volume. So very, very good. And that gave me another conviction. But in that situation, I started to monitor the stock closer, because you can see that when we switch to the weekly chart here, you can see that the stock was already rallied almost 300% here, and you can see it was more than 100% above the EMA 200. So it is an extended stock here, and in that situation, when I trade an already extended stock, so a high relative strength stock, a momentum stock, I'm always looking to sell into the strength, and I want to sell as quick as possible when I'm sitting on a big decent gain. And in that situation, so when I saw this follow through, I decided, of course, to hold and to monitor the stock more closer. So I always have two scenarios in my mind. The first one is, do we see a reversal bar or anything similar on the next day, or will the stock go sideways and the volatility will decrease? So, and what we see the next day was an inside day, so no decision right now. That's something I will wait. And then another very small bar, and this is typical of volatility contraction. You can see that if you switch down to the hourly chart or to the 4-hour chart or something, you can see the volatility contraction, and that happened also on lower volume. And that's a situation when I expect a continuation to the upside, and that happens on the next day. So we can see that here, Aphria was breaking out here, and I added another 5% to my position, so that I'm sitting, or that I sat now in a almost 30% position. So 20% plus gains plus another 5%. So that was around 30%. And I decided to hold for another day, because you can see when we look at the weekly chart, the all-time high was around $20. So it was very close to the all-time high here. And very often you can see that a stock will overshoot the all-time high and then reverse. So I decided to wait for another day, and that was exactly what happened. So on the next day, the stock opened around 26, so around here. But it was in the pre-market, it was already on 21.20, 21.30, so a little bit higher. And I started to sell a little bit in the pre-market session, because there was a huge gap up, so it was 15% above the close. And I decided to sell a little bit. And then on that big bar here, which also happened on almost the highest volume here, I decided to sell out my whole position between 20 and 24 here. So the most stocks I sold between 20 and 22 here. And that's the same reason as with Fulgent. You know, I sat in a big profit. I wanted to make a decent profit in a short time. That was successful here. The stock is already extended. I initially planned the trade as a short-term trade because the stock was already extended. And in that situation, I unloaded my whole position here. And I moved, of course, that capital from the Aphria trade into new trades. Which are not part here of the video, but they are also very successful. And then you can see, and this is the today's bar, you can see that this, or that here on that day on the 9th February, so yesterday, that was not the end of the rally. Today the stock exploded to the upside again. So it opened, you can see here, it opened on 31, so here, and so around here, and then it completely fall back and closed the gap. And this is absolute pure exhaustion in my view. And but I don't have any regrets about that, because I made my trade. I think I made I have to look 15 times my initial risk with that trade. So a very, very good profit in a very short time. And I don't have any regrets about that, because I was also able to move that capital into the next trade. And especially when I'm trading all this high RS names or high relative strength names, momentum names, I never want to hold them for a long time. So this is never my intention when I trade a momentum stock. I always want to make a decent profit and then use the profit and move it into another trade. And when I'm trading other stocks, so like Roku, for example. I hold Roku since September now. And that's a stock, where I believe more into the future and where I think, okay, this is not a pure momentum play and I want to hold it for a longer time, etc. And I'm using the EMA 21, but as a exit point. But in that situation here, Fulgent and also Aphria both showed me such a strong momentum here that I automatically switched to my selling into the strength momentum strategy. Just that you understand it, would have, for example, Fulgent, would Fulgent showed a different behavior, if we would have seen not in momentum explosion, but a very calm and steep uptrend, so a very steady uptrend. In that situation, I would not have sold into the strength. No, in that situation, I would automatically switch to my trend following strategy and use the EMA 21 here. So, but I always adjust to the price behavior, and when I see that Fulgent exploded so to the upside, you doubled in just 1, 2, 3, 4 days. In that situation, I want to exit with my momentum strategy, and then move my capital into the other trades. Okay, I hope that it helped you to understand that I personally handle momentum names differently, and that I always have different selling strategies. By the way, I made a video about selling strategies, so you can find it in my YouTube channel. And that I never have any regrets to sell a stock into the strength, because I always have in mind that I move that money into a next successful trade, that I always keep my equity curve at the high, so I do not allow these strong momentum names to turn my equity curve into a drawdown. So I want to exit them at the high, and then I don't have any regrets to sell all the stock. So this is what you should keep in mind when you look at those momentum names. Okay, I hope that this video helped you to understand that. And if you have any questions, write a comment, give it a thumbs up or down if you like, or if you don't like the video. You can subscribe to my free newsletter. So I send it out every Sunday with trading tips and some stocks from my personal watch list. And of course, you can follow me here on YouTube and Twitter and Facebook and Instagram. And so I hope that this video helped you to understand my trading strategies a little bit more.